Hey, how's it going, guys? Hope everything is going well on your side. Today we are the 17th June of 2023 and I'll be making a quick analysis of what is going on the market for the last week. So just before to start, I'll wait until a few people are going to be on the live. I'll just check out if everything is working well. Let me know also if you can hear me well in the chat. So it is pretty important for me to know if you can all hear me well. I'll make sure that everything is working well first before to start. Before to start, just to make sure. Before June of 2023, and all right, so I think that everything is gonna be working well. So it won't be too long. I just wait until a few people are gonna be on the watch on the live stream and I'll start. I'm gonna connect myself as well on the live stream. All right. So we have a few things I want to talk about in this video. Just start. All right, so I'll start. I see that there are a few people right now, so I'll be starting the live right now. So as I told you earlier, it is currently the 17th of June 2023, Saturday. This week has been quite tumultuous on the stock market. We've seen that there was a lot of upside that happened throughout the last 2 weeks, but we have had two big impact and two big important news that have impacted the stock market recently, notably the Fed decision to not increase the interest rate, which was pretty surprising for most people, including myself. And we've also seen last week that the Bank of Canada decided on its side to increase its interest rate of about 0.25 basis points. So we're going to take a look at all of that, starting as always with our weekly market wrap. And so if you have any kinds of questions or comments you want to talk about throughout the live, don't hesitate to use the chat and I'll read all your different comments. And if you want me to, for example, check out different, let's say, different stocks or companies, well, just write it down in the chat. And so I'll be able to make some stock analysis as well at the end, because as always, we'll start by checking out what is the actuality and what happened throughout the last week on the stock market, but also in the global economy world as well. After, we're going to take a look at a few companies that I want to check out with you, notably Tesla, that has been continuing to grow a lot over the last couple of weeks. We also have Amazon recently that have been talked a lot. I want to check out at Palantir as well. And if you have any kind of other stocks you want me to keep a look at or to analyze, well, it's going to be the great time to do it at the end. And after, I'll finish obviously with what will be the next week's events on the market. For example, for the next week, we don't have any big events that are coming up, but we have a few earnings that might be interesting for you. And so I'll be talking about it at the end of the live stream. And because today it isn't going to be a big live stream, so I'll be making probably a live stream for maybe 30 minutes or maximum, I would say about 45 minutes. Well, you will have time after to go enjoy the great weather. However, here we don't have some great weather over here in Quebec, but it doesn't matter. Maybe at your place it's going to be great to enjoy the weekend. So I'll be starting as always with, as I told you earlier, the weekly market wrap. So what happened throughout the last week that is important for the investors to know? First, I would tell you that one important thing that happened, as I told you earlier, is the US Fed news that happened throughout the last week, which was really, something that many investors were looking at and were waiting for great news, because we've seen that throughout the last year, the Fed and the Bank of Canada have been able to continuing to increase the interest rates, because the impact of that they want to have is to be able to reduce the total inflation that was through the roof, where we see where we were at the same period last year. We were at an inflation that was super high. So it was their objective with this move. But we've seen that, as I told you, it was unchanged at its last meeting. We see that the inflation is on a downward path, as we can see. Obviously, I'll share with you later on with, I'll start by talking about it, the CPI, so the inflation. I'll start by sharing with you what is the current inflation. Let's take, not this. Let's take a look at, for example, between 2019. So let's say from June 2019 to what we are currently. So you see that it has been massively increasing throughout the end of 2021 and the beginning of 2022. We've seen that the inflation was through the roof. But after all, it has started to slow down. You can see that it has started to slow down. We don't have the result for June, but it must be around here. So maybe around, I would say maybe around between 6 and 5% for sure. So I don't know the exact numbers for June, but we'll see later on. But the inflation has started to slow down, and in Canada, it's even more important. We can see that the inflation has been, I believe, about 4.25% or something like that, and they've decided to still increase the rate because they want to slow it down even more. And this will obviously have a massive impact, notably on the real estate market, as we'll see later on in this live stream. So on the US side, they have the Fed hasn't decided to increase it, and we don't, however, think that it is the end, and they don't think those people that are making this weekly market cap are some financial analysts, and they don't think that it's going to be the end of the interest rates hike, because even the Fed chairman's Jerome Powell has said that he was going to continue to increase the interest rates until the inflation is under control. So we can see that, however, the Bank of Canada took and increased it earlier just to increase the interest rates to slow down the inflation. So this has been pretty much the important news. After all, for less aggressive. So, oh yeah, for sure, you'll be able to see later on as well that a few companies such as Tesla and some big tech in the US have been gaining some great momentum lately. But keep in mind that all of this momentum usually might not continue as well as it currently is doing on the short term. Obviously, Tesla, I think, has been up of over 100% since the beginning of the year. You can see that Tesla is up about 141% year to date. So it's pretty much incredible for the first 6 months of the year. It has more than double its value. So you can expect a certain correction on that part. Tesla and all the big tech companies, if you take a look at Meta, it's going to be the same, about the same. So you see Meta is up of about 125% year to date. So those companies have been able to perform well, and those are some large cap companies, which is important to understand that the large cap companies usually won't fluctuate that much and won't gain that much value in a short period of time, but it's more about the small cap companies that will have more potential of growth, as you might know. So this is important to expect that those companies and the market in general might slow down in the next couple of months, because we've seen some super fast growth. But as soon, personally, this is what I believe, but as soon as we'll have the news that the Fed and the Bank of Canada will continue to increase the rates, well, it will obviously makes that people won't necessarily invest and won't have the possibility to invest that much as well in the market, and we might see some kind of correction on the market on that side. So right now, I just want to make sure that I have no comment. All right, so we have no comment. So I'll continue. Yeah, so a pause was prudent. So the move line of 14-month tightening campaign that lift the Fed funds rate by the largest amount. So yeah, they are trying also, because keep in mind that when you are increasing the rates, you are trying to slow down the growth in the economy. But if you decide to increase the rates too fast, it might cause a big economic crash, and it is what the Fed and the Bank of Canada are trying obviously to avoid, to not crash the market and the global economy. But and it is notably why the Fed, I believe, have stopped and have decided to not increase the interest rate for the last week. But it was pretty not anticipated, because people were talking about a future increase, because it was sure that they were continuing to increase, but maybe they want to take more time to increase the interest rates. So it is what we can see. The inflation remains on a downward trend, as I told you earlier. The CPI more than 2-year low, 4%, helped by falling energy prices. As you will be able to see, the energy price represented by the oil has been falling down recently, and the OPEC has decided to have and to adopt some new methods to try to increase the price of oil, because the OPEC, for those that don't know, is actually it is actually a petroleum exporting country. So it is an organization of countries that are exporting petrol to different other countries. We have a lot of different Middle Eastern countries in that organizations. You can see over here we have Qatar, Indonesia, Libya, the United Arab Emirates, Algeria, Nigeria, Ecuador. So you have a bunch of different countries that have access to petrol, that control this organization to control kind of what is the price of the oil. And we've seen recently that the oil price, if we go take a look at it, it has been slowing down. I don't know if we can have the oil price on a okay, we have it over here. I don't know if you can see it well, but the oil price has been going down since its highest point, that was just before the war in Ukraine. You can see that this has happened because with all the sanctions from the US and from Europe to Russia, it has notably made the price of oil crash because of those sanctions. So we can see that the highest point was potentially, if I can have more than 1 year, we might be able to see it. I don't think we can have it here, but maybe here. All right, so you can see that its highest point was pretty much throughout. It has actually spiked after the beginning of the war in Ukraine. So about at the end of February 2022, you can see that it was at its highest point, close to $121 per barrel, which is a lot, and it has diminished since that point a lot. But now the OPEC has decided to restrain the offer of oil, and we'll see. I'll present to you an article about it later on, but it has obviously had a certain impact on the price of oil that has started to regrow a little bit, and we'll see later on in the video. So this is all about the CPI. You can see the CPI numbers. Producer, it is going down, as we saw. It has started to slow down since since the summer last year. It has started to slow down the inflation. The jobless claims, it is starting to increase. However, the jobless, so the numbers of people that don't have a job has started to increase, notably in the US. After April, we can see that there was a a big spike at the end of April 2023. This is not too much interesting. So you see that it is actually over here. We can see that this represent the yellow trait represent the CPI, so the inflation, and we can see that this represent the Fed increase of the interest rates or decrease. You can see that there was a massive increase since you can see that the inflation has started to rise up, because usually, as you can see over here, normally when the CPI is going out, so when the inflation is going up, we can see that overall it has the impact to increase, the Fed and all the organization that will regulate the interest rate will normally increase their interest rate when it's going up, except during 83 and between 89, because it was a kind of big problems at that time. You know, there was a massive crisis between in the 70s and in the 80s in terms of the interest rates. When you wanted to go, for example, buy a home, it would cost you like about 15% of interest, so it was a lot. But you can see that right now, since that the inflation has started to rise up, they have decided to massively increase the interest rate, but we're still far and very far from the 18-20% of interest that we saw throughout the 1970s and 80s. After, so that's pretty much about the pause. They're really talking about the sector performance. This can be very interesting also to understand that right now the tech sector has seen some massive growth, notably with all the semiconductors chip companies, but with all the different other companies such as Tesla, also Meta, and other big tech companies that have massively grown. But usually this means that sometimes we are in a cycle where there are a lot of optimism throughout these kind of companies, and it might not necessarily be the best play to do on the short term. If you want to make some quick gains, I wouldn't necessarily recommend you to invest in the tech at the moment, but you can take a look, for example, at the other sector that has been going down over the last 3 months. For example, the real estate sector. So I have notably Raucan that has been not performing super well lately. You can see if we take about the last 6 months, it has been going down of about 1%. It is always staying pretty much in the same. It isn't too much fluctuating, this company, but you know, it might be an opportunity for you to try to aim for different real estate companies. But you can see also the consumer staples, healthcare, but also the energy companies. I have big companies in my portfolio, for example, Enbridge on the oil side that isn't really performing well lately, and I think that Enbridge might really represent a great opportunity for you with a dividend at the moment that is close to 7%, and I think that I'm going to talk about it later on in the video. But Enbridge, in my opinion, is pretty much the best oil and energy company you can find in Canada. So for all the Canadian investors, I personally believe that investing a certain portion of your income, maybe in companies like Enbridge and even the financial companies, for example, TD, that has lost a little bit of value lately, it might not be a bad idea to do it, I think. So those have been pretty much the performing sectors. So in terms of the markets, you can see that the TSX market over the last week have gained a slight increase of about 0.50%. The S&P 500 has continued to massively increase of close to 3% just over the last week, with notably big companies like Tesla, as I told you earlier, that has been continuing to massively grow. The emerging market have been also massively increasing over the same and the last week, and they have gained about 2.4% throughout the last week. The Canadian investment grade bonds have not necessarily moved a lot, as well as the 10 years yield. The oil has been increasing of about 2.4%, and you can see that there has been a small change in the Canadian US dollars exchange. So that's pretty much it for this week on the market. I think that it was pretty clear that the big events that happened and that obviously impact our overall stock market performance and our overall economy have been the not increase what have been the Fed keeping the same interest rate. But for the Canadians, we've seen that the increase of 25 basis points will obviously have a great and a big impact, I would say, on everyone, for example, that have a mortgage. If you've just bought, if you're like a young family that have just bought a house and that you've paid a lot more money than you should have paid for that house, and now that you have a variable rate and that you're paying a lot of interest and that you're not even able to, after all, pay all your mortgage, but also all your car payments that have been increasing. So it might be a lot suffocating for many young families at the moment, and yeah, that's pretty much why at the moment I've had personally the objective to buy real estate, but I'm not gonna do it in those conditions. So I'm gonna wait a little bit for that. So we've talked about this was what I wanted to talk about, the home owner situation over here, because you see they are saying in this article from the Stars, the Toronto Star, they are saying expect another rate hike in July, because the next meeting of the Bank of Canada is going to be in July, and most certainly they might continue to increase the interest rates. So it's going to be interesting to see what will happen, but now you can see that the interest rate over here in Canada is about 4.75%, and even if the inflation has started to slow down, they have still increased it. So they are concerned, they are saying that the Bank of Canada spoke loudly that they are quite concerned inflation is sticky and the economy is not responding as much as they wanted. Because keep in mind, and we'll see later on in the video, but keep in mind that when the problem with inflation is that there are many things that might create inflation and might continue to increase inflation. For example, if you have a situation where you have employees that want to have a higher paying, they want to have a higher wage, well, it will put pressure on the different businesses and the different enterprise to increase their wage, and at the same time it will simply make that the inflation might continue to increase, because the method that is used by all the organizations such as the Fed and the Bank of Canada is to increase interest rates to slow down the consumption of people, because people won't have the same buying power, obviously, with the inflation that is increasing. For example, you can see that the butter, the eggs, and obviously the oil has also all rise up in price. But it will also make that with the interest rates that are increasing, this has the objective to slow down the increase of those consumer goods, for example, such as the price of the eggs, of the milk, etc. But it will obviously increase the cost of borrowing, for example, if you want to buy a new house. But also it will indirectly impact you if you are currently a tenant that is living and that is renting, for example, at $1,000 per month your apartment. Well, maybe your rent will increase even more to 1,100, 1,200 per month. So I don't know the different rules about that, but it will certainly have an impact on your rent and on what you pay every single month. So it is pretty much that for the interest rate. I've talked a lot about it. Now I just want to talk also about the OPEC the decisions. But just before, I want to make sure I don't have any kind of question. All right, it seems pretty good. So now in terms, so yeah, that's the interest rate. That was the impact, just to share with you what is the impact of the raise of the interest rates. You can see that it's talking about a lot of different things. The U.S. national debt, saying increase, as I told you, the borrowing cost in the U.S. and in the world. Fueling an increase in the national debt, obviously, because you will pay more interest, which means that you won't be able to pay back the capital that you have borrowed. So, and after the business profits, obviously, that will be impacted by this interest rate. So they're talking about that, the auto loan rates, the mortgage rates, the home sales, etc. So it has a really big impact on everything. To increase interest rates is really, it is an event that will impact all the markets and everyone. It will simply impact everyone. This is what you need to understand. So now that we've seen about that, I want to talk about the OPEC, but I don't have my link anymore. I'll just search it out over here. So you see right now what is going on with the OPEC and the control of the oil price is that they are making some cuts. They are making some cuts right now to just re-increase the price of oil. So they are just limiting the production of the oil. This is what you need to understand. They are trying to limit the production of oil to increase the price, because as always, you have the graphic of the supply versus demand, where if you increase obviously the supply and the demand stay the same, it will make that the price will obviously decrease, but in the case that you decrease the total supply, but that the demand will stay the same, because at the end of the day, people will continue to need having oil, for example, for their cars, or to, for example, fuel their house. So they will continue to have needs for that, and so the price, if you decrease the supply, will increase. So it is pretty much what is important, and they've talked about it lately, that Russia pumps about 40% of the world's crude oil, meaning that obviously the fact that how would I say, the sanctions from the US on Russia will have its impact obviously on the price of oil, and we've seen it with the beginning of the war in Ukraine. So now I've pretty much talked about, I haven't talked about those, but to see right now what are the biggest movers throughout the last week, we can see that the top gainers in the S&P were companies like Ball, Cornish, with CCL, Ercom, Bunge, Everest, and companies that have lost a little bit of value. Important to understand, Netflix has lost quite a little bit of value lately, Target as well, Autodesk. So you see that this is pretty interesting for everyone, for example, that wants to try to invest with the timing, because sometimes, as I told you earlier, there are some sectors that have gained a lot of value lately, like the tech sector, but it means that it might not necessarily be the best option for you to invest in those sectors that have gained a lot of value lately. But it might be a better option, for example, if you want to decide to invest in sectors or in companies that have lost some value, notably because of certain events that happen in the market. And that's what we can see over here. So that's pretty much it. Now I'm going to talk fast about different companies, as I told you earlier, starting as always with our famous Tesla. So I'm going to just click on that. I'm going to go take Tesla so we can take a look at it together, guys. Obviously, with what? All right. So now we can see Tesla. Over the last month, you can see, if we go take the chart for the Tesla stock, you can see that it has gained a lot of value lately. Over the last month only, it has gained close to 50% of value. Over the last 6 months, it has been a gain of about 73%. And since the beginning of the year, it has been some massive gain of over 141%. So what this company is up that much? Well, obviously there are a few things that have happened this growth. Obviously the fact that it continues to grow in terms of all the financials. If we take a look at the financial metrics, this company is rock solid. You can see that its total revenue has been continuing to increase, as well as the earnings before interest and taxes. You can see that everything has started. Also if we take a look at the operating expenses, they haven't been increasing that much, which is a great news. So it means that they are able to produce and to generate more cars and to create more cars at a lower cost. So it is very interesting on that side. So they are able to start selling a lot of their electric cars. And you can see that even the operating cash flow have been massively increasing over that period, over the last 4 years. You can see that the pandemic has been very beneficial for them, since they have gained a lot of value throughout that period. And in terms, however, of all the different valuation measures, you see this company currently worth even less than $1 trillion. But what is important to understand is that recently its price to earnings have been massively increasing, notably because of the massive gain in value that it has seen. But it still has some great profit and operating margin, and you can see even that the return on equity for the investors over the last 12 months have been of about 28%, which is excellent. And so yeah, we can see the return, the revenue. In terms of the revenue over the last quarter compared to the same quarter last year, it represents an increase of about 25% in their total revenue. And the good news for the investors also is that they won't be impacted too much by the high debt because they don't have too much debt, only about $5.57 billion of debt compared to about $22 billion in cash, which is awesome, great news. You can see that this company isn't only some hype company where it might not be worth it, because Tesla has been growing a lot and it has been able to grow its infrastructure as well a lot. And since more and more countries are starting to adapt to the new electric vehicle trend that is coming up in the next couple of years, you can see that Tesla right now, in my opinion, is the number one leader in that field. So it's going to be a great company to keep an eye on. Lately, it has gained a lot of value. Palantir as well. It's the same. Palantir Technology. It's a quite smaller company, however, Palantir, but if we take a look at the 1 month, you can see that it started to gain. It has more than double in value over the last month, notably because it is a company that is in the tech sector. I highly recommend you to check it out if you're interested. I'll be making a video on it pretty soon because it is a company that personally I am quite interested to invest in, but right now it might not be necessarily the best time, in my opinion, to invest in it. You also see that Amazon, I'm going to do it quick because I don't want to end the live stream too late. You can see after that Amazon has also started to, you can see it, regain some great value, and Amazon was a company that actually I am not as bullish on Amazon as, for example, for Tesla, because Amazon, I think that it has a lot of competition on the market, since it is only like an e-commerce company focused obviously on selling products and services online. But I think that they have a lot of competition I'm started to get tired. I think they have a lot of competition on that side, and it might be a little bit problematic for them. And as you can see right now, they have a super high price earning ratio of over 300. They have gained quite a lot of great momentum, but I still think that at the moment, this company might not be the best pick. And finally, most importantly, I wanted to talk about Enbridge for all my Canadian investors, because at the moment, I think Enbridge might be a great pick for anyone that wants to make some great dividend income. Unfortunately, you can see that the last dividend date was the 12th May of 2023. So probably, I believe that if we take a look at the dividend, the next dividend normally should be paid in August. So probably it's going to be, well, actually, it's going to be the ex-dividend date in August. So probably you're going to have some time to just accumulate some shares if you want right now, because what is interesting about this company, you can see, I just want to share with you how negative it has, how much momentum it has lost lately. So you can see that it has lost quite a lot of momentum, like year to date since the beginning of the year, compared to the overall market. If we compare with the overall market, the S&P 500, which has gained about 15% year to date, so it is massive. After the last year, you can see that it has gained a lot of momentum. You can see that Enbridge on its side has lost about 7%, which, as I told you earlier, is mainly due to the oil price that has been drowning. So it might be an interesting company to invest in at the moment with a 7% dividend. And you can still see, if we take a look at the financials, you can still see that this company has been able to continue to grow the total revenue. It is also a company that is adapting to, for example, tomorrow's environment, notably with some great electric and some energy transport, and some green energy transportation pipelines and stuff like that. They are starting also to build a lot of different, I don't know how to say it, but a lot of great green energy generator. So it's going to be a great company to keep on your watch list, in my opinion, right now. And personally, if I'm not adding some shares of this company in my portfolio in the next week, I might be doing so in the next couple of weeks that will come just before the next ex-dividend date to receive some other great dividends. So I think that's pretty much it. I'm starting to get a little tired. I think I have talked about pretty much everything that happened throughout the last week. Well, obviously the Bitcoin, because you probably know that Binance have just decided to quit Canada, but the Bitcoin has also started lately to lose a little bit of value. You can see that over the last month it has lost 5%, so it isn't as great as some people might have thought. I think the Bitcoin now has seen some massive hype throughout 2020 and 2021, but now it has started to slow down. And personally, I'm not that much interested to necessarily invest a lot in that crypto. I still have a little bit of Bitcoin and Ethereum in my wallets, but I'm not gonna be fully bullish on that, and I'm not gonna add a lot of money on that because I think that the big tech companies on the long term have way more potential compared to the Bitcoin. So that's pretty much for it for the last week and what is going on right now. We're gonna take a look at the future earnings. So for the next week, so on the 20th, so obviously you see that the 19th of June is I don't know, I think it is a day off for the stock market in the US. I think that there is like a holiday or something like that. For the 20th, if we take a look, show more, you only have smart share. I don't even know what it is, but you don't have that much earnings per share report this week that are interesting. You can see that there's a few companies, but it doesn't represent a lot. So the 22, you can see Accenture, Darden, GMS, Method Electronics, Crown Crafts, Smith and Wesson. The 23, we can see that there is, so Friday, the next Friday, Karl Marx and Apogee. So not a lot of great news coming up next week. I might not be doing a live stream for the next Saturday. After I'm gonna be in the vacation, so it's gonna be probably more in 3 or 4 weeks where I'm gonna make a live stream. So there will potentially have a lot more to talk about. But I think that I've made a great overview of the market right now. So yeah, the important news to keep in mind: the interest rate will continue to increase, even if the Fed has said and hasn't decided to increase the interest rate over the last week. We've seen that they will potentially increase it in June, as for the Bank of Canada. And obviously, keep in mind that the increase of the interest rate, even if, for example, you don't have any mortgage or any debt to pay, it will have an indirectly impact on you, because it will impact if you're a tenant, as I told you earlier. It will impact your rent. It will impact the price that you will pay to live, for example, for your rent. And it will obviously impact other different criteria in your life. So it is important for you to understand that. And for the rest, I think that it is pretty much what happened throughout the last couple of weeks. If you have any questions, any comments, any stocks you want me to keep on my watch list, or if you want me to make any kind of stock analysis on it, just let me know it in the comment section. And as always, guys, I hope that I've been able to answer all your questions and all your preoccupations in this live stream. I'll be doing one more probably, maybe next week, depending, Saturday, potentially. I'll try to make another live stream the 24th of June, but it is not sure yet. I'm not gonna make any videos for tomorrow's, the 18th of June, but obviously, as always, we'll come back to the usual grid, and you'll see a video probably on the 21st of June 2023. And so I hope you're gonna be enjoying the weekend. Hopefully we're gonna have some great weather, and I'll see you soon. Bye.